Hello, everybody. Thank you for coming. I'm Benoit, CEO of Accrue. We're a big data analytics company here in Hong Kong, building chronological event data sets for investors. So I'm happy to be here, greeted by 3 AI experts for investments. And we're going to talk today about the world of AI in the past, present, and future. So I'd like for everyone to introduce themselves.
My name is Yaron Golger. I'm the CEO and co-founder of I Know First. Our main product is a predictive algorithm that generates daily forecasts for the entire financial markets. We are using artificial intelligence, machine learning, deep learning, artificial neural networks to predict the financial markets. Our predictive algorithm, is generating daily forecasts for over 10,000 assets from different asset classes: equities, commodities, currencies, cryptocurrencies, world indices, and ETFs, with predictions for different time frames: short-term, mid-term, and also long-term.
We're Amber AI. We're an electronic trading and technology firm. We focus on market making, systematic trading across a variety of different cryptocurrency products, including spot, futures, swaps, and options. We operate around the clock and around the globe, and as of last year, we traded roughly $50 billion in crypto.
I was ready to dance. So my name is Ksenia. I'm from Syndicator. We use hybrid intelligence to create predictive analytics, and in-house we have our own Algotrading teams, which constantly experiment and use our own indicators, market sentiments, and signals to check them and to test them to see how it works. We believe that only symbiosis of machines and people, wisdom of the crowd, and artificial intelligence can create valuable and accurate data.
Thank you. So we made it through the party, it sounds like. So I want to talk a little bit about the history of how we got here. We're now at this intersection of AI and investing going mainstream, which is why we're having this conversation today. So I wanted to learn from each of you a little bit about your perspective as to how we got to this intersection about AI being accepted in the mainstream.
You know, we started I Know First in 2011. Back then, when we tried to explain what is artificial intelligence and what is the connection between AI and the financial markets and how we can predict the financial markets, it was basically like a Chinese for most of the firms. However, in the recent, I would say, 2 years, we can see that most of the institutionals, banks, investment firms, hedge funds, family offices are actually starting or to develop their own predictive algorithms or algo trading tools, or to search for an external solutions that could provide them a significant shortcut in this journey. So I would say that currently people or institutional clients are looking for AI-based predictive solutions or algo trading tools, and this is part of the investment world right now.
Thank you. How about you?
Yeah, so for us, we started back in 2014-15 using machine learning to run various strategies in A-shares, so Chinese equities, onshore commodity futures and bond futures. And kind of the backstory was, as opposed to using AI for the sake of using AI, there were many, I think, non-linear patterns in the market which we could not interpret or generate without the use of machine learning. I think if you take a step back and think about the broader investment management industry, looking across kind of fund management surveys, it is now almost becoming a trend that, you know, industry AUM is growing every year, but if you ask allocators, they're increasingly unhappy with traditional strategies. So a lot of traditional strategies are very correlated. systematic strategies tend to be focused on different kind of clusters or buckets. And so I think kind of the rise or kind of the hype of AI has kind of risen from that in using kind of uncorrelated and more niche ways to find uncorrelated alpha.
Thank you. How about you?
Because we're on the panel of digital assets, I would say that cryptocurrencies started and like with algo trading, and this is a trend where all trading will be soon switched to algo trading. Crypto is just essentially started already in this with this tool and with these instruments. Syndicator, when it was established in 2015, from the very beginning, they understood that they wanted to not to use like manual trading to test some strategies, but algo trading it's what is essential for crypto. So yeah.
Thank you. I'm still dealing with the sound.
I'm trying to read your lips.
Yes, exactly. So, I mean, right now, AI is obviously it's come a long way, and it's actually hit the mainstream, which is why I think this panel is really awesome, and I'm proud to be on it with you guys. So, what are two of the most, I guess, little known or non-obvious trends that are taking place right now that really stand out that might be driving us forward?
Yeah, I can start. So for us, trends which we see in algo trading is that traders, they already have the skills of coders, so they can themselves code, and they become actually more they more create strategies for algo trading than trade themselves, and this we see as a trend. So traders, manual traders, will be creators of the strategies mostly for algo trading. And the other thing is that we use inside our company, we have a team of data scientists, and we also ask them to create the strategies for algo trading just to see how it works from their perspective. And this combination of traders, data scientists gives us and brings us very interesting results.
I think from my point of view, over the past few years, what's been really exciting is kind of the rise of deep reinforcement learning. So going back to 2015-16, when DeepMind was acquired by Google, now we have OpenAI as well, beating humans on 5-on-5 Dota 2. I think actually tomorrow DeepMind is going to showcase StarCraft 2, AI versus humans. I think the reason I find that interesting is because these are all games of imperfect information. And if you think about the markets, they're also games of imperfect information, because nobody ever wakes up and buys a stock at random. And so if you think about what markets really are, they are humanity's collective expectation of future productivity. And because imperfect information games, or kind of the use of reinforcement learning has kind of already beaten humans in many of these tasks, I think the next is actually the use of reinforcement learning for trading, kind of the role of self-learning, unsupervised learning.
One of the most interesting trends that we see right now is the opportunity to use AI and algo trading tools in two ways, actually. The first way is to utilize it as a decision supporting tool that helping institutionals to take the right decision by using AI-based tools to identify the best investment, the best stock, to conduct the stock picking, to identify the most promising currency or the specific cryptocurrency that's relevant right now. The second trend that we see is the opportunity to use AI tools, AI predictive tools in systematic way as part of systematic strategy, and based on that to develop an investment, AI-powered investment products. It could be smart beta ETFs, it could be an hedge fund, or it could be even a mutual fund. that relies on AI or algo trading tools.
That's great. I think we touched on a couple of interesting points. Man versus machine is pretty much summing up the moment in essence. So where do you guys see in the short run and in the long run, especially the short run? I mean, are humans losing? Are humans losing this battle versus man versus machine? All the top investment banks are downsizing their investment. They're traders. I mean, Goldman Sachs went from 200, 300 traders down to just 7 or 8. I mean, they can count them on 2 hands. So at the investment bank, we see this happening. So what do we see taking place in other areas of the economy? Is that going to translate anytime soon, where retail investors are now going to simply be using AI in order to make all of their decisions, or play their video games for them?
Well, humans are losing by definition. Currently, 80% of the trading volume, for example, on the equity market, is done by machines in the US. This is the latest data. 80%. So only 20% are associated to human traders. And this provides the entire picture. And this is just going to grow, I believe, in the future. Even the human part, or the human traders are going to rely on predictive tools. So this 20% is not going to be a pure 20%. And of course, more and more systematics and algo trading applications are going to be implemented in the next years.
Yeah, I definitely echo that. But I think also it's important to distinguish kind of automation from machine learning. Machine learning is not always needed. Where it is helpful is where you have a lot of data and a lot of kind of manual processes, where perhaps a lot of times there isn't a way to linearly define or classify actions. So I think machine learning is useful in those cases where you can find nonlinear patterns, whether it is through supervised learning or unsupervised learning. And I think it's still too early to say that machines have taken over versus humans. 80% of what's traded is done electronically and algorithmically, but it is still a team of humans who have written the algorithms, who have done the testing, done the feature engineering. I am not of the belief that you're going to have AI agents only trading against each other in the future, but rather I think at some point it will become almost irresponsible to not have at least the assistance of machine learning to make better investment decisions.
I think that machine learning, artificial intelligence generally is a very helpful tool for humans. But still, and especially in cryptocurrency, in crypto industry, in crypto world, it's not enough data yet to just let AI work by itself. So we need at least like 5 years of collecting data and building the strategies with humans' active participation. So I believe that now and probably in the future, only symbiosis between human and machines will create these results. And this is how it works right now. People still create the strategies. Then AI, machine learning, just as a tool, we use it to make it faster.
That makes sense. Oh.
Yeah, and I think across various industries, if you look at where machine learning has done the best, it's in like convolutional neural networks for image recognition. Kind of looking at cross-sectional data is one thing, but I think what's unique with markets is we are trying to predict the future. And so a lot of the pitfalls or flaws with relying too much on machine learning is if you were to just give it a random, a machine learning algorithm, it doesn't matter which it is, it would find some pattern. And so the flaw, or I think where many people fail is they tend to overfit. You can always find a strategy which works perfectly over the past few decades, and when you start trading it, it may not necessarily work.
Yeah, I agree with your remark. Just to add, I wanted to highlight that not everything is predictable. When we are saying, we are talking about AI-based algorithms or predictive models, we need to remember that, in the market there is a predictable part and there is a not unpredictable part. But the key here is when using AI-based algorithm is to focus on the most predictable assets and from this investment universe to trade. And another remark regarding the strategy, I agree, some of the strategies are done by humans. However, by using reinforcement learning, there are also strategies that being generated and built by the machine itself. And I think during the next years we are going to see more and more AI-based strategies and not only human strategies. So we're going to use AI not just in order to implement a human strategy, but we are going to use AI also in order to build and structure the strategy itself.
So in 2018, we saw record volumes in crypto. We saw record volumes also in foreign exchange activity, in July specifically. So in a down market that we had since that period of time, do you feel that, what are the key factors that maybe take place between humans and machines that might drive market participation back to those levels? And will we see that happen in 2019?
So I actually think this has less to do with kind of machine learning or AI, but if you look across, crypto, last year, we had this massive wave of retail participation, not a lot of trading firms or liquidity providers in the market, a very gappy price action, wide spreads, and a new influx of kind of market participants. Every day, week, and month, people were paying for verified accounts on some larger exchanges. I think one trend we've seen over the past kind of couple of quarters is the newer entrants coming in. Many of them focused on market making or liquidity provision, in crypto. Traditional high-frequency trading firms and liquidity providers, big names like Jump or DRW has been involved for a long time. Tower Research, and that's contributed, I think, to lesser volatility because people now can, for every bid offer you cross, there is more liquidity on both sides of the market. I actually don't necessarily think that, for us to get to kind of higher volumes, it's going to be because we have more algorithms. I think that's more kind of indirect. More algorithms in the market perhaps create less friction, but I think for us to get to where we were last year, barriers to entry have to come off. It has to be easier for people to buy and store and trade crypto.
FX as well, that you would say the same thing for foreign exchange?
I think overall, foreign exchange volumes will tend to fluctuate more with what's happening in the macro economy. So last year was, I think quite interesting because you had correlations pick up across assets, commodities were down for the most part. Equities were kind of topping over, and then you had rates selling off as well. And so I think that contributed to a lot of volatility. But I think that's harder to predict, going forward.
Yeah, I think I see some interesting trends during the next year that related to the trading volume. First of all, it all depends on the volatility. If we are going to see recovery of the market, more and more hedge funds, more and more retail clients, more and more institutional clients are going to feel more comfortable, and we are going to see increase in the volume, specifically in the crypto side. However, if we are going to see a negative market during the next month, I think most of the clients are going to stay away from the market. Another factor, again, is the machines. If we are going to see more and more machines during the next month that taking advantages in the crypto market, we are going to see increase in the volume. So I think those are the main two factors that are going to affect the volume.
Trading volume is very uncertain category because, as we know, a lot of exchanges did wash trading during last year, and this is actually, I suppose, was a human decision. not machine. And we also had a lot of arbitrage during the peaks of market. So this was like a peak of machine I don't know, usage. But now it's different because now what we see and what we all waiting for is actual companies coming who we can rely and tell that the trading volumes are real, like Chicago Mercantile Exchange or Chicago Options Exchange. So this is the trend from all this hype and making money and wash trading and market making to more stable growth, to less trading volumes actually, but to more stable and to more real.
Yeah, and kind of on that note as well, one recent trend over the past year has been, derivatives are now the kind of main point of price discovery. If you were to rewind like 12, 18 months ago, just sitting in front of screens looking at how different exchanges or cryptocurrencies on different exchanges behave, the importance of exchanges like BitMEX or OKX were not as big as they are now. You would have a big sell order go through on Bitstamp or Kraken, and then derivatives would follow. Whereas nowadays you tend to have big liquidations happen in derivatives, and spot tends to follow. So derivatives now make up a majority of the trading volume in this space. I think that's going to continue as well.
I'd like to thank our panelists for covering the AI investing intersection today, and I thank you all for coming, and see you next time.
Thank you.
Thank you very much.
Thank you.